deposited into your bank account. This is straight from the Federal Reserve. Okay, your check goes to the bank, or you deposit your check indoors to the bank. The bank gives you a, let's say it's $1,000 check. This pen is broken. I need new black. Okay. Thanks. That's cool. I'm going to do the liability side first. So how many are familiar with double entry bookkeeping? Okay, for every asset there's a liability. Okay. Right here is a $1,000 liability for the bank is created. The bank sends the check over to the Federal Reserve. Let's see if we can fit all the ledgers on here. Okay, so bank sends the check over to the Federal Reserve. Federal Reserve says, okay, go ahead and put a temporary credit right here. Okay, for every asset, which is in black. Did you give me a new one? No. That was the new one? Yeah. I'm good. That was Mike's. Yeah, no, I will get a new one. This one sucks. Alright, I'm just going to write in red. Stay away from that bit. Alright, so $1,000 asset, which is the security, the check itself. Now, what happens is the Federal Reserve holds over here the bank's account. See, the bank itself has an account over at the Federal Reserve. You've heard of reserves that we have on a fractional reserve system? Well, whatever's over here in the bank's account, this side is a liability to the Federal Reserve. The Federal Reserve holds an asset over here to offset that. Okay? So, you have this credit is the same as this liability. It's a credit for the bank. It counts as their reserves, so they can fractionalize it 10 times. Okay? Accept loans based on that. So, you have your $1,000 in an liability account at the Federal Reserve, which is the reserves of the bank, is the same as the assets over here in the bank's ledger. So on the bank's on their ledger, it's an asset. On the Federal Reserve's ledger, that money is a liability. So now the Federal Reserve gets the check, and they notice that it's from Bank C. Okay? So they debit Bank C's liability account, or the Federal Reserve's liability, Bank C's asset account, which reduces their reserves by 1,000. Whenever a bank's reserves get reduced, it must reduce its deposits by equal amount. So the bank is now put into a position where it must reduce its reserves by $1,000. So what does it do? It reduces your account by $1,000. It says, hey, since you're the guy who authorized that check, we're going to reduce your account down to 1,000. Okay? So, is the check itself money? No. It is. I'm here to tell you, it is. It's got a signature on it. It's a negotiable instrument. It's money. Okay? So, $1,000 endorsement went in here. The credits got put on temporary hold here. And the bank, when Federal Reserve went to this bank and said, hey, we're going to reduce it for 1,000, is that okay? And they look at the account number, they go, yeah, that guy's got $1,000 in there, go ahead. So they reduced the account. Now there would be a ledger over here for Bank C. And Bank C would list this money as an asset. And it would have deposits over there that it just reduced by 1,000. Okay? So That's what happens when you deposit a check. Oh, man. This black doesn't erase either. Yeah.
So it's a number. After the signature, it's a number until it actually hits the place that it's going, and then it turns into money.
It's money the moment you sign it.
So it's a note.
Now remember, all we showed is the bank's ledger.
Yeah.
You have your own ledger.
Yeah.
Okay? Your trust, your corporation has its own ledger. It was on the books of your trust until you deposed yourself of the funds and gave it up to the bank. Okay? Now, whoever wrote you the check, the check itself ends up owed at their bank eventually. Remember back before 2000, they used to send you your checks back?
Yes.
When was the end of the last bankruptcy? 1999? Okay, you know why they don't send you your checks back anymore? Your securities. Now, what? So, here we're moving over here, we're dealing with Bank A and the Federal Reserve. Now we're going to come over to Bank B and show what happened with that same check. Okay? So over here at Bank B, we're going to put two ledgers. And we're actually going to leave the Federal Reserve out of this because you saw what happens at the Federal Reserve for Bank B. Bank B, this is the deposit account, so to speak. It went negative 1,000 for Brenda when she, or for Dylan, he sent Brenda his child support check. So this account went down 1,000. The check itself is a security. Now, a security is an asset to the bank. Okay? So it gets ledgered over here as an asset. However, it is not in the Federal Reserve account. Remember, what they can leverage is what's credit on their Federal Reserve account. So this is being held in an escrow account at the bank, this $1,000 check as an asset. But there's no liability funds over here for it, so it's just sitting there. Now, a bank can sell, when a bank needs capital or it needs reserves, according to the Federal Reserve, there's one way a bank can increase its reserves: selling securities. So the bank can sell the security. Who are they going to sell it to? Federal Reserve. Is the Federal Reserve going to get the funds from? Treasury. Okay. So, and this, like I said, follow modern money mechanics and you'll see the flow of funds and how it's moving. Okay. Now this check is sitting over here. Your account, you're Brenda, and your account's been reduced by $1,000, right? And your bank is holding this security up here. Okay? This security has a face value. The face value of the security is whatever you wrote in on the amount of the check. Okay? That security is actually your property. The way the bank gets away with selling it is they have to wait what's called a testing time, or a testing period, which is 36 months, according to the IRS, before they can declare it abandoned. Then they can sell it and increase their reserves. Okay? So, because they've got this $1,000 security, at the end of the year, Brenda goes to do her taxes. She remembers that security she created, and all of a sudden she remembers that the bank never sent it back. She did not get her security back. So, what happened? It's an original issue discount is what happened. The original issue was Brenda writing the check. Brenda wrote the check to Dylan, Dylan deposited. So, Brenda wrote the check ended up back in this escrow account. Okay? So, the definition of original issue discount is the redemption value minus the issue price. Okay? How much did Brenda's bank pay her for that $1,000 security? Nothing. What's the redemption value? 1,000. So what's the original issue discount? And if the original issue discount is $1,000, did they give her the $1,000? No. So it's been withheld. Okay? If you look at your if you look at your 1099, if you look at 1099, there's information for the payer, information for the recipient, an account number. Box number 1 is the original discount. Now let's say that that's the only check Brenda wrote. That's a new martial law. Okay. If that's the only check Brenda wrote that year, then there's $1,000 in box 1 because that's the original issue discount. Okay? Now, seeing as Brenda's not a financial institution and didn't put any interest terms or anything on the instrument, she didn't write, 5% in 2 years or nothing like that. She just wrote $1,000 on the check. So, box 2 and 3, which box 2 is periodic interest and box 3 is early withdrawal penalty. None of those exist, so they would be zeros on the form. Box number 4, federal income tax withheld. What is the federal income tax withheld on this particular transaction? $1,000. Okay? So the $1,000 of the original issue discount, which is the redemption price or redemption value minus the issue price. Okay, that's the original issue discount. And the amount withheld is how much did they hold on to that they didn't give you. And they didn't give you any of it, so they withheld the entire amount, $1,000. So, box 4 is the same as box 1. The total amount of original issue discount, if it's all been withheld.
Can you explain how that $1,000 is defined as a federal income tax?
How it's defined as a federal income tax?
How is it a federal income tax?
The bank itself is withholding a tax. For instance, if the money is due to you, you're the original issuer, that's the redemption price, and they pay nothing for it. So basically, since they're withholding those funds, they're acting as an agent for internal revenue on those funds. And if they wait the 3 years, they get to sell that security. Now, then they'll pay the tax on it. But until those 3 years are up, it's probably just sitting there. Okay? Yeah.
What if you have a joint account? What happens then?
If you have a joint account, it doesn't matter because each person is authorizing the fund. It depends on whether you file a joint 1040.
Oh, sorry. Okay, so what if the joint person passed away? Then do you just file yourself?
How would you file your 1040 as a widower?
I don't know.
See, the thing is, when you have a joint account, typically you're married. Is it a situation where the parties are married or no?
No.
Okay. So it's a joint account, married. Some parties are writing checks. Like both parties are writing checks?
Yes.
Okay. So realistically, you're both creating the credit each time. So it depends on how you're going to file your 1040. Is she going to declare original issue discount? And if she is, which checks is she declaring? Is she only declaring the ones she signed? If so, that's fine. Realistically, you can both sign for the full amounts on each, as long as the other doesn't. So if one person's going to file all the OID, that's fine, because you're a signer on the account. Whether it was your signature or not, you're an authorized representative on that account.
So for past checks that she wrote, and we're joint, I can claim those checks that she wrote because I'm joint on it?
Yes, were you joint on the account at the time?
Yes.
Yes. Because realistically, you're both agents of the account, and you're both trustees on the account. So the funds need to be claimed back if the person's deceased. If the person's deceased, then there's no way for them to claim it back. So you'd have to claim it back. Otherwise, you're letting it sit. See, what happens if you don't claim this back? You just created debt. In the world. Yes. Okay, this security outstanding and not coming back to you creates debt. Every time you spend money in public, you're creating debt. If you don't get it back, the debt just gets bigger and bigger. So people, I know, like to ask the question, well, how much is out there that we could get back? And in reality, how much debt have you created? It's about $10 trillion right now. That's how much debt we've created. Okay? And we've never claimed any of it back. Well, I'll take that back. Some people have been doing this since the 50s and 60s, getting these funds back in different ways. But realistically, the modern movement, I would say late 80s, or late 90s, really, for the OID end of this. So since the late 90s, there's been a lot of people claiming the funds back, but not enough to reduce the debt significantly. Microphone.
How many years back can you go and you have a box full of old checks? What are those?
What's the testing time?
36 months.
36 months. After 36 months, the shit's gone.
What if you're holding the original checks?
It doesn't matter. Oh, wait, you have the original checks?
Right before.
Well, you're supposed to send those to Treasury. See, now you're not in the same position. See, they're doing you a favor by keeping the checks. See, when they send the check back, well, now you got to send them to Treasury, and it'll create your account. But it's better for them to hold it and let them deal with the Federal Reserve and Treasury.
So you're talking strictly, is this a physical checks only? Or if you're paying out of like my auto, just paying out of my online account to Visa?
Okay. So how did you pay?
I just clicked the box that says pay Visa $500 and...
So what was it, a debit card transaction?
Just out of my checking account. Electronic.
EFT, is that what they call it? ACH? You put your account number in?
Yeah.
Okay.
Well, right out of my checking account, so it's
okay.
Union Bank.
Any transaction you authorize out of that account creates a security. Okay, back in the day, everything literally had a written security with a signature on it. Remember, even to get cash withdrawals before ATM machines, didn't you have to sign to get that cash withdrawal? Yeah, because you're creating a security with a face value on it, and that goes and sits in the asset account. Okay, so and that's why credit cards have the signature on the back. Every time you swipe it, you're signing your name. Every time you enter a PIN number, you're signing your name. Okay, and it creates a security. So all that goes out of the account, really, you're authorizing the issuance of. Even when your bank just says, oh yeah, we decided to give you a bounce check fee of $45. You authorize the creation of those funds. And that's sitting over here as a security. Okay?
So if you get your original checks back, does this affect how you fill out your tax forms?
If you get your original checks back.
Right. Without sending them to the Treasury and you're holding them,
if you're holding them, then there's no original issue discount. Now you haven't redeemed them, right? There's a redemption value to them, but
right.
You haven't redeemed them.
So now, okay, so then say if I do send them into this place before 36 months.
Ladies and gentlemen, we're happy to announce that we are offering trustee training and notary classes for all interested parties, Monday through Friday. For more details, please feel free to reach out to us at 904-490-0297. Again, that number is 904-490-0297. We can be reached from the times of 9 to 5 on Monday through Friday, and you can also reach us 12 to 4 on Saturdays. If you can't reach us there on the line, please feel free to drop us an email at B as in boy, I as in Isaac, D as in Dave, I as in indigo, I as in indigo, L as in Larry, B as in boy, E as in Edward, Y as in yarn at gmail.com. Again, that email is BIDZIILBEY at gmail.com. Remember, if you're interested in getting your affairs in order, you need to start by getting your mind right. Peace and love.
Original checks back, does this affect how you...
Actual repayment is overdue by 50 days. So be careful when you define the default event, but at the same time, ensure that the definition of default event is consistent to your credit risk management policy that you may have. Now, in order to implement...
We have with us an investor, Simon, a few of his colleagues here, Stephen and Victor. Welcome, guys.
Hello. Thank you for having us.
Sure, yeah, thanks for being here. So, Simon, why don't we start out with yourself, just kind of what type of investment firm you operate, what type of investors you are, etc.
Thanks. Yeah, so I represent here, which is an investment company in China. What we are precisely looking for is so-called language of life deal investment opportunity. This is a deal where eventually investors and entrepreneurs are on the win-win side. No one is left behind. So we do it worldwide. We are not raising capital. We are the capital. And if anyone out there is looking for real business partners, for real investments with the language of life, that's what we represent with Golden Solutions. With me, my colleagues, my CD, Stephen Wanda, and Victor from my investment partner, SCG. So we are all three of us here, and the idea is to really show that together is what counts in today's market economy. So when we invest, we want the community, we wanted to emphasize that together makes successful business.
Okay, and we have a lot of numbers in the family office with everything from fintech deals to agriculture to real estate in Singapore to venture capital, in London, etc. What is the scope of deals that you guys can move forward with on your capital you're most hungry to get from our Invest Cloud? Is there someone that wants to kind of answer that question on a high level?
Yes, so me personally, I'm looking for real estate deals in the medical field because we have a medical group and we are looking for international partners to set up a hospital chain. So that's what I'm looking personally when it comes to our company's interest. Stephen, would you like to answer this question?
Yeah, sure. Now that I'm in Southern Africa, there's challenges in solar renewable energy. So most of the deals that I'm getting or that we need to fund are renewable energy deals, that is solar or windmill energies.
So with capital can be done.
Okay. Great. And across for all three of you, is there one type of deal that you already have capital secured for, you can move forward on the fastest, that above everything else, really stands out when you talk about between yourselves? If we could find more of that one type of deal, we could get a lot more done. Is there a very specific type that really stands out among everything else?
There is one energy deal that right now going on in Qatar in cooperation with Breakthrough Energy. If anyone wants to join this venture capital deal, let us know. We will get them in contact, and we are also in this deal. So we are globally investing, and one of our high-class deals right now is the so-called solar energy deal in Qatar. So for any questions, let us know. It's number one deal right now.
Okay, so it seems like in the energy area, you guys have a deeper expertise, and for an energy deal, you guys are looking for more deals like that. Is that right?
Yes, we actually take any deal coming in. Each of us personally, I'm looking for the length of life side. Stephen is doing the diligence on whether it's renewable energy to reserve investing, and Victor is finally doing all the finance stuff. So each of us has actually his specific role, and we open any deals. So it's send me deals, and we found on LinkedIn, Facebook, and also private phone numbers are there, so that really everyone can talk to us and submit deals. We take all of them if we like them.
Sure, great. And then what would be the number one lesson that you guys have learned investment-wise related to due diligence or working with other investors or sourcing deals? What's the number one lesson you can share with others listening?
First the connection, then the solution. That's my advice. Would you also mention something, guys, Stephen, Victor?
Yeah, we're able to help other people with our funding. We actually are going towards right now people having and helping them get liquidity from those to help their deals go bigger or just start a deal with them. We're actually we're helping someone get $500 million in South Africa as well for something they're doing with oil. So yeah, if you guys need some liquidity from that and you have it with you and you are not able to raise capital any other way, we're able to help you as well.
Right. Okay. Great.
And what makes us unique is it's like 10 to 14, 15 days. So if you need like rapid capital, don't hesitate and ask now.
Sure. Great. Well, I appreciate you doing this interview. Maybe we do one of our discussion panels. There might be a topic related to energy, international financing, et cetera, that we could have one or two if you want, maybe sort of round out a discussion panel and have a more kind of global perspective than we might have otherwise. So I appreciate you doing the interview here today. And definitely keep in touch for one of those panels coming up soon.
Sure. Would be a pleasure to be there.
Sure.
Thank you, Richard.
Thank you, Richard.
Take care.
Okay, thanks.
Hello, this is Richard C. Wilson with the Family Office Club, and today we're doing an investor mandate interview. We have with us Tio. Welcome, Tio.
Hello, Richard. How are you?
Great. How about yourself?
Also very good. Thank you for asking.
Great. So I know you're a private investor. What do you actually invest in and spend your energy and time into allocating to?
To start off with, yes, I'm a private investor. I manage my own wealth. I also manage the wealth of my own family, as well as another family, which is a close friend of ours for many, many years. Furthermore, I've also helped other investors from time to time with some opportunities and to allocate some capital as well. I guess the best way to describe my investment strategy and the way that we do things in the most simple way would be that our portfolio is divided into, let's say, two different parts. First of all, we focus on direct investments, meaning the investments that we do ourselves. These can be either public or private, and we can discuss that a little bit later on. And also we focus on co-investments, meaning that we give our capital to professional experts, and they have a vision or they have an execution that they want to do.
Okay, that makes sense. What types of co-investments do you most often pull the trigger on, or what type of co-investments in 2020 are you really looking for right now?
Well, 2020 has been a very interesting year, hasn't it? Generally speaking, when we're looking at investments, co-investments, asset classes, I usually divide it into three different things that we focus on. Basically, first and foremost, we do stock index funds and ETFs. We mainly focus on regions, sectors in North America and Asia Pacific. I guess these have been the strongest regions of the world economically. Europe has been lagging behind for several years now, if not a decade or more. In particular, we like to invest in small caps, as history shows that they tend to outperform. They have a premium over large caps. So that's the public side. We don't really do a lot of stock picking or anything like that, and we don't allocate to fund managers, and we have considered hedge funds before, but not really like a tea, let's say. The biggest focus of mine is real estate, and I usually allocate to real estate in a single syndication deals as opposed to pools of capital or funds and so forth. And I would like to divide real estate really into four strategies that I do. So firstly, we like to participate in development projects, which is your growth opportunistic style, which obviously is not for everybody, but myself being young, I'm interested in wealth creation as opposed to wealth preservation. So this time at my age, it's very important to me to grow my capital. Also distressed equity, and we can discuss that a little bit later on, but distressed equity is not really something that's available all the time. But when you do have a downturn, as we are having in 2020, as you asked with COVID-19, there are potentially some distressed equity opportunities out there. It's about finding them, about doing quick due diligence on them, because as you know, when there's a big discount, they disappear like that. We also, thirdly, in real estate, we like to focus on U.S. multifamily syndications, but that class is a little bit hot. There's a lot of capital chasing too few good assets there. And finally, which is a bread and butter of ours, because this has been a family business of ours for over 2 decades in Australia, we focus, fourth of all, on luxury rehab renovations in prime locations. We either do a rehab or a total development. So that's real estate and stocks. From time to time, we've also invested in alternatives, but that's quite rare. These are usually opportunities outside of stocks and real estate, as I said, that don't have a relation to those two key asset classes. And one of the investments we've been doing in 2020 has been Australian Agriculture Fund, which specializes in pastoral and poultry farms. So basically, you have this growing macro theme, I guess, over the next 20, 30 years with potential shortage of food, rise of the middle class in the whole of Asia, and Australia is right at the doorstep of supplying that. We have very good products, in particular Australia is very well known. So we are focusing, that's kind of like a half private equity because these are cash flowing businesses, and half it's a diversification thing where you got agricultural theme, you got non-correlated asset, and you got inflation hedge. So those are the three ways that we invest really.
Okay, great. Yeah, no, that's super helpful. I appreciate that. And I'm happy to keep in mind for things we see from the Family Office Club. So what would be the number one piece of advice you have for someone that you wish you knew 10 years ago when it comes to either sourcing deals, structuring deals, how you invest, etc.?
That's a great question. So basically I have a Twitter handle that's a little bit popular in finance, and I always write advice on there. Every day I write some kind of advice that's either passed to me by my mentors or that I've learned from mistakes. So getting down to number one, maybe I can do two. The first one I would say would be to invest only in great deals, otherwise just going back, just be patient and wait. As I followed and learned a lot from, Sam is obviously a famous guy. He once said, I remember the quote on CBC, he said, people in real estate always ask me, hey, Sam, what markets are you buying today? And Sam always replies, we don't ever buy a market, we buy a deal. So I think we can talk about hours about what makes a great deal or a fantastic opportunity, but I think in a nutshell, I think investors have to look at hundreds of opportunities to understand what's going on. I think you mentioned this many times yourself, Richard, because basically, you know, you have to come to an understanding over hundreds of deals that you look at that you say, so, hey, this looks interesting. This is actually an anomaly of a deal relative to everything else that I looked at in real estate or in the stock market. And this could actually work. This could actually be a potential for me to allocate my money because after all, a lot of high-net individuals and family offices earn their wealth in a difficult, hard-working way. And when you go and risk it, you want to make sure you're risking it in those anomaly deals. Right. You know, generally speaking, great deals also tend to have a fantastic risk to reward, I think, which is very important. And for us in particular, for me, the way that I invest, even though I'm a growth investor, as I said before, I'm still not going to go, you know, shooting around like a cowboy trying to get any deal with the biggest upside. The way that I think about it for me, especially in real estate, we're focusing on deals with meaningful margin of safety. So we have that downside buffer. And I always say to myself, my parents and so forth, when I'm investing, if we take care of the downside, if we can withstand the downside, and we've done it very well so far in coronavirus, then regardless of whether the upside is small or large, it'll take care of itself. If we can take care of the upside will take off. So that would be the first piece of advice. The second one would be, as I've learned from my mentors and so forth, to be a contrarian. So I think it's a very easy topic to discuss. We all talk about it, but it's extremely difficult one to execute because it goes against our human nature. So I guess the way that I would say is we are not wired that way. We're basically required to go against the herd. Like right now, for example, there's a huge amount of capital going into tech. And you know, the fundamentals make sense. People are paying higher and higher valuation. To me, means that future potential expected returns will be lower and lower eventually. So, you know, that's basically going against your natural instinct. You have to buy when others are paying, and it's not very comfortable to do so. And when there's really good times out there and the sector or the asset makes sense to hold, but that's the perfect time to sell because that's when you're going to get the highest valuation for it. And I think there are many ways to be a successful investor. One doesn't have to be a contrarian, but I think in essence, investing basically is buying low, selling high. And by default, if something is cheap, especially in real estate, if something is a value proposition to us or it has a discount or it's in distress, that means there's something wrong with it. And that, therefore, there's always plenty of reasons not to do it. So to be contrarian, as I mentioned, sell before, an opportunist who can buy, you know, he famously sold his real estate company in 2007 and bought it back in 2009 for pennies on the dollar. So that's a fantastic thing to be able to say, but very difficult to execute.
Right. Yeah, no, for sure. We, you know, a good example of not buying a market would have been chasing a piece of intellectual property for 12 years since 2008, and it's been valued at $1.2 million the whole time. But during the pandemic, it's come down to $500,000. So we're trying to close that, but we're not buying the whole market of intellectual. It's one type of property that we can make strategic use of. You see that in a very so I totally agree with that. It's a deal, not we're buying grocery stores, and people say, "Oh, well, grocery stores in trouble." We're buying the whole. It's not a macro bet. You're buying the whole stock market ETF of grocery stores.
Yeah.
So, it's totally different than a stock market ETF index type mentality. It's almost the opposite of that, right?
Definitely.
So,
I mean, majority of the wealth that I've created so far, and I'm very young, and I've got a long way to go, but been through looking at my even if a recession worse than the GFC occurs, I could be able to break even. And I just think to myself, what a fantastic deal, because if none of those risk tails curves, really bad scenarios, and there is so much profit there to be made. And I'm not one of those investors. Being a contrarian also obviously means the markets rarely have downturns. I mean, this has occurred since 2008. Maybe in Europe we've had a big win because of the Eurozone crisis and so forth. But generally speaking, it's very rare for markets to down. So real estate or stocks or something else, then you see around patiently waiting. And I don't mind being in cash for some of the time. I don't have to always chase and always perform, and I'm like a fund manager. But then when that sweet spot comes, it falls into the target, it's fantastic.
Oh yeah, that makes a lot of sense for sure. Totally. Well, I know we're trying to keep these interviews to 5 minutes, and I've kept you here for 15. So I think this was a good interview. I'll have to have you back on a discussion panel maybe sometime in July or August, and join us on one of the private discussion panels we have each week. I appreciate you here today. If anyone would like to get hold of you, they can just reach out through our membership, and we'll help get you guys connected to share deal flow or ideas or research on something I think you two could connect on perhaps. And thank you again for your time.
Pleasure, Richard. Thank you. Bye.
Take care, Tim. Bye. This is Richard Wilson at the Family Office Club, and today I have with me John. Welcome, John.
Richard, thank you for having me.
Sure. So we're doing an investor mandate interview, and I'd like to get to know you a little bit better and kind of share what you're investing in with our members. So what type of an investor or investment firm do you represent?
Yeah, so our firm is located in the northwest side of Chicago. We have clients across 30 states in the U.S. as well as in Western Europe. We are a broad-based RIA, so we really operate. Our service model mindset is really working with the families as the chief financial officer back with the families that we serve. So working the liability side of it, working the broad-based diversification from a public market, and then managing the risk on the direct investments. Ranges quite a bit in terms of families that are in fintech or real estate or agricultural technologies that are there. So it ranges quite a bit in terms of what the mandate comes from the family. And then on the broad-based side of it, disruptive technologies, really like disruptive technologies and how we move forward with things.
Okay. And I know we were speaking right before we started recording that you're based in the Chicago area, and we've done a lot of events there and some family offices there. I know that regardless of where you're based, you probably have some clients that are more hands-off, that want money managed or RIA, and I'm guessing you also have some clients, like you said, that have background in fintech or manufacturing or real estate. How does your particular firm handle those clients that are doing direct investments, or they're looking for things to go directly in, not through a fund and not just public markets? How do you fit into that picture for those types of families?
Yeah, and so that mandate varies by the different families. So a family that's in real estate and development and building out, for example, technology centers, the data warehousing that's out there, they're looking for broad diversification and away from real estate and the opportunities that they're seeking, because they already have the deal flow that's coming through and what we're talking about there. The flip side would be for somebody in fintech, right? They're already seeing a lot of what's going on the cutting edge in that space with the concentrated positions that are there. So how are they managing that risk? And then how are they looking over the real estate side of things? Flip side for, like the ag tech family too. So it really does vary quite a bit. So we're not very narrowly focused from that perspective, and saying there's one thing that we're looking at or one item or one asset class that we're managing on behalf of clients. It really is the total balance and looking at that allocation across the total balance sheet.
Okay. And what do you think's been the key to success growing your RIA to this level and making it a successful business operation?
I think it's just the relationships. Everyone's come to us on a referral basis. The depth and time, and the going slow, a relationship. That's true and that's true also with managers around in home sticks.
Right. Yeah, I relate to that for sure. Okay. What's the number one investment or lesson that you learned to a decade ago?
I never fall in love, right? Never fall, whether you're on the buy side or the sell side, never fall in love with it. Don't get emotionally attached to it, right? The amount of horse trading that goes on as you get closer to the finish line, you just can't get married to it, and being willing to walk away if need be, and maintaining discipline. I mean, it's discipline, it's long-term discipline, and it's kind of like the ocean, right? There'll be another wave coming. Don't worry about panicking to jump on the wave that's in front of you.
Right. Great. Yeah, I think that's the way the public markets have been. You know, people have felt like they've missed a wave or two just out of unexpected things happening. So for those listening to this, you know, in the summer of 2020, you can probably relate to that. So appreciate you being here today. If anyone would like to connect with John and discuss maybe a way to work together, you know, with his RIA, or, you know, meet in Chicago once the virus is gone enough to actually meet with people, or to work on something else together investment-wise, you know, please let our team know, and we'll help get you connected with John. And then each week we're doing a virtual investor discussion panels and live webinars as well. In case you're just watching one of our first few video asks here, we'd love to have you on one of the discussion panels one day, John. If we don't already have you scheduled, then it'd be great to do so sometime later this summer or the fall.
That'd be terrific. Yeah, that'd be terrific. I look forward to it.
Great. Yeah, thank you for your time here today.
Thank you.
Take care. Hello, everyone. It's Richard Wilson from the Family Office Club, and we have with us today Vanessa. Welcome, Vanessa.
Hi, Richard. Thanks for having me.
Yeah, thanks for being here. So what type of an investment firm or investor are you?
Sure. So I work on the capital markets team at a firm called We are a $20 billion plus or so real estate investment firm. We focus both on the equity side of things and in the debt markets as well. Specifically in the equity verticals, we invest value add mostly within multifamily, workforce and affordable housing, office, seniors housing, and then we do a bit of development within those sectors, but focus most of our development efforts within our Opportunity Zone platform. In addition, I mentioned we have a debt platform where we invest in commercial real estate-backed fixed income as well as agency mortgage-backed securities.
Okay, great. Obviously, any firm with $20 billion in assets, at least that I can think of, has many different divisions, managing directors charge of each division, and if I went to each managing director, they'd give me a different answer to this. But what is the type of deal, like strike zone size or cities, where it's a family office member that says, hey, look, I don't have the balance sheet for the debt, I can only raise part of the equity, but I have an amazing deal that's at it's an institutional quality size that they think that Rich would be interested in. Can you give us a little bit more framework around how you might be able to collaborate with members that have that type of a quality deal, like that, what you call quality, kind of internally?
Yeah, sure. That's a great question. You know, I think if you took a step back, of course, the way we're structured, like you mentioned, we're a specialized investment management firm. So we have a CIO and a dedicated team for each of those verticals that I just mentioned. Like you said, it's going to vary depending on the strategy. But I would say from a market perspective, we do spend a lot of time analyzing where we're going to invest in. And I think there are a lot of resonating themes that apply kind of across the universe for our verticals. So we specifically focus within the U.S., and within the U.S., we look at secondary markets. You know, you'd be asking, what exactly define the secondary market here? So the way that we define secondary markets is looking at markets where we think there are healthy real estate fundamentals. So where are there areas that have strong household formation? Where are there favorable employment trends? Where are there some strong demographic trends? For example, if we look at multifamily, one of the drivers is a growing millennial population, a growing segment of immigrants that need multifamily housing, Class B specifically. For our seniors housing sector, we look at the areas where we see this growing cohort of 75 plus. Where are they trending to in terms of locations? then to answer, I guess, the second part of your question in terms of sizing, it ranges. We may do deals that are kind of as small as 10 to 20 million from an equity ticket to kind of as high as 100 million, depending on how we're buying. So in some cases, we may buy one asset, or in some cases, for example, our off portfolio, we bought a portfolio of assets that resulted in a much higher equity requirement from a fund perspective.
Okay. Makes sense. In cities to be at a much better price than the primary cities, of course, and they still are, but, like Nashville and Austin, some of these cities have become, so hot, like Denver. It's interesting, I see some going to, Huntsville, Alabama, and Jacksonville, Florida, over what used to be the popular secondary cities. Are you seeing it as well? Or at $20 billion in assets, the city has to be big enough that you can do a real size project and it's not too tertiary. How do you guys approach that as a firm in terms of, are you avoiding some the Nashville types that have been so popular for a while, or do you still see good growth in many of those types of cities?
So that's a great question. I think as you think about the trajectory, so we typically invest within fund structures. We do co-investments as well. Our fund lives are different, varies, but investment periods may range from 3 to 4 years, and the fund life to allow for the harvest and realization anywhere from 8 to 10 years. So if you think through that timeline and that investment horizon and where we think there will be growth in kind of that time horizon, that's how we think about where we're investing in markets. We're constantly underwriting. So there's definitely been growth in cities that hadn't historically been on the map. That toggle between, or that line between secondary and tertiary, I feel like sometimes can be dependent on how someone looks at it. I'd say more importantly, it's driven by some of the fundamentals that I was talking about. You see areas like, I'll give you Austin, for example. That's a really hot market, has been for a bit. We are building in our Opportunity Zone platform, we're building a multifamily there. There's a lot of jobs that are flooding into Austin still. We still think this is a really attractive market. It's all dependent on the pricing that we can get. So we wouldn't overpay necessarily for something that may still be a growing market. It's all about finding the right price and value from an investment perspective for us.
Sure. Yeah, that makes sense. Okay. And then what would be your number one piece of advice for a real estate investor or investment firm listening to this?
It's a great question. I would say, I think it goes without saying, obviously, that, you want to partner with, whether you're on, the investing side as a GP or an allocator, or if you are a client looking for someone to partner alongside with. I think it's really, really important to think through who you're partnering with. So, like I said, of course, choosing someone who has a strong track record, 10 years long-standing, those things kind of go without saying. But, for us, when we think about building relationships and building that trust, that doesn't just look like, talking through a bunch of pitches, but really a thought leader. And how can we provide value to our investors? How can we be proactive, responsive? Inadvertently, you'll experience market turbulence and, a once-in-a-generation pandemic, and there's going to be volatility, but working with a partner you can trust that can give you perspective on the markets and broadly give you information on how to invest and be a good investor and be a good fiduciary for your assets is a very important thing that I think we've found and continue to place as utmost importance, especially at Bridge.
Sure. Yeah, it makes sense. Okay. Great. Well, I'll be happy to keep in touch as you guys continue to grow, to 25 or 30 billion over time, and ways to collaborate and have you on discussion panels more and contribute to the CRE platform we were talking about. Just get live here the next few weeks. So appreciate your time here today, Vanessa. And if anyone listening would like to get in touch with her regarding the project you're working on or co-investing or doing something together on the investment side, just let us know and we can get you connected to her and her team. And thanks again for your time here today.
Thanks so much. Look forward to speaking with you soon. Take care.
Thank you. Bye.
Bye.
Hello, everyone. It's Richard Wilson here at the Family Office Club. Today we're doing an investor mandate interview with Kyle. Welcome, Kyle.
Thank you, Richard.
What type of an investment firm or investor are you?
Well, thank you very much. We are a firm which is basically in the business of taking private assets public. So this is the area where we specialize. As such, we do pre-IPO rounds, we do various seed rounds, but ultimate goal is for us to take an asset which is currently private public to one of the major U.S. or Canadian exchanges.
Okay, great. And what types of geographical focus and industry focuses do you have? What's the kind of scope of your clientele?
So the clientele and scope and the pipeline is very diverse. We are known as emerging market specialists as a team in the first place. However, we do fair amount of U.S. and Canada transactions as well. If I were to go around what we have currently, it really spans across Asia, Europe, including Eastern Europe, and Latin America.
Okay, great. And then in terms of the number one or top two industries where you can be the most and be the most productive based on the past work that you've done, what would those be?
We are generalists, but we switch from sector to sector. However, on the team we have who specialize in sectors only. You have to pick 3 or 4 sectors that sort of considered to be the core of what we do. This would be technology in very general terms. That would include IT, outsourcing, cloud, engineering technology, medical technology as well, which is very popular these days. So technology in general, this is probably number 2 would be natural resources, oil and gas.
Okay.
Mining would be number 3, and I would pick also financial services, except banking.
Right, okay. And then most people don't have your area of expertise here on taking companies public, so you might have a different answer than most investors that we interview, but what's the number one investment lesson or insight you'd like to share that you wish you knew maybe a decade ago?
Okay, so imagine an emerging market company from one of the BRICS economy with potential EBITDA still considered sort of mid-side by U.S. standards, which basically makes sense to take public in the U.S. because of one reason being the arbitrage between the multiple at which we can negotiate the deal for our investors and our shareholders, and the multiple that we think we can get it traded in the U.S. or Canadian market. So that arbitrage is basically what our investors are all in there for. This is why we're doing this. It's not too aggressive for the company either, because we understand that they need to take a discount to already publicly traded companies in the market, right? So it all makes sense because investors are getting essentially a very personalized private equity deal in the public form at a good price. And say a year or 2 years down the road, with the right positioning, with proper reporting, with definitely good news, the company can grow itself and double, triple the size.
Right. Okay, great. I'm happy we got to do this interview. Out of the 80 investors we've interviewed, everybody has really talked about taking companies public, or that being their skill set, or that being the type of company they're trying to focus on for investment. You know, surprisingly, it hasn't really come up. So I'm glad we got to have you here as part of the interview series, and perhaps one of our virtual investor discussion panels. It'd be great to add you to the conversation on the private equity side or direct investments, and taking into consideration that chance of going public when valuing a company and trying to see the path towards a potential exit is often something that people like to plan out before they pull the trigger on an investment. So I appreciate your time here today. And if anyone would like to get in touch with Kyle, we're happy for our team to help make that connection. If you're a member of the Family Office Club, then just let us know, and we'll get Kyle and you connected. And I appreciate your time here today, Kyle.
Richard, thank you very much. I welcome everyone to get in touch with me and Richard on that topic, and we're very open to new investors, and we're very active pursuing our deals right now.
Great. Appreciate it. Thank you. Take care.
Thank you, Richard.
Ladies and gentlemen, we're happy to announce that we are offering training and notary classes for all interested parties, Monday through Friday. For more details, please feel free to reach out to us at 904-490-0297. Again, that number is 904-490-0297. We can be from the times of 9 to 5 on Monday through Friday, and you can also reach us 12 to 4 on Saturdays. If you can't reach us there on the line, please feel free to drop us an email at B as in boy, I as in Isaac, D as in David, I as in indigo, I as in indigo, L as in Larry, B as in boy, E as in Edward, Y as in yarn at gmail.com. Again, that email is BIDZIILBEY at gmail.com. And remember, if you're interested in getting your affairs in order, you need to start by getting your mind right. Peace and love.
The refugees not fleeing COVID or climate change, as the UN and Klaus Schwab are saying, and Bill Gates is saying, but fleeing the year-long lockdowns that the UN and Bill Gates ordered them to institute, or they wouldn't get more IMF and World Bank money. And that's why we have to really get educated about the globalists.
It's time to show them what a real alpha male looks like with one of our most powerful products ever made, Alpha Power. As you age, your body can lose testosterone over time. With the incredible ingredients in this formula, we can help you beat the test of time and assist in restoring that lost energy and mood that comes with time and age. Alpha Power's incredible ingredients can help you boost your sports performance or enhance your day-to-day life with ease while encouraging hormonal balance. Perfect by itself or with super male vitality in the true Alpha Male Pack. Alpha Power can help boost performance, help maintain normal testosterone levels, support healthy cholesterol, and more. Let Alpha Power help bring you to the peak of your optimal health. Don't fall short on energy. Fight against tyranny. Show the world what a true alpha male is. Alpha Power. Info4.com today.
My enemies are your enemies. They're the globalists. They're a consortium of mad stories, devil worshippers, vampires, whatever you want to call them, that are highly predatory and are setting up a false fantasy land system of constant bombardment of propaganda, drugs, electromagnetic radiation to change the very DNA of the human species to mutate us into a form that they can control like a pawn on a chessboard. The bottom line is they want to play God. They are playing God, and the news is only going to tighten around our necks from here on out. So many other people want to be positive. They want to put out fake news and want to only cover limited amounts of what's happening with the New World Order. But at the end of the day, it's all about the population. It's all about world government. It's all about the end of human system as we know it. And on its ashes, a nightmare being built. Only admitting it can turn it around and stop it.
The ultimate fluoride-free charcoal mouthwash is now available at InfoWarsStore.com and DrJonesNaturals.com for the lowest price possible to complete your daily mouth cleaning routine. It is the perfect companion to the new activated charcoal toothpaste, all under our new line by Dr. Jones Naturals, that will naturally give your mouth and breath a deep clean. This mouthwash only uses the best natural ingredients like real peppermint oil, thyme oil, xylitol, and of course, high-quality charcoal. Not only fluoride-free, this mouthwash is completely free of other dangerous ingredients such as SLS, harsh detergents, BPA, and so much more. As soon as you use it, you can tell that this formula is the real deal. So get your bottle of the new activated charcoal mouthwash right now at InfoWarsStore.com.
You're listening to The Alex Jones Show. You're listening
So we see this stunning irony of leftists vehemently supporting these very lockdown policies which entrench power within the government, and with censorship of criticism of lockdown, criticism of the vaccine, entrenched power within giant transnational corporations, suddenly realizing that that has a negative knock-on effect. They've suddenly realized that they've lost the right to protest, and that's why we saw the scenes on Clapham Common just a couple of nights ago with these feminists being manhandled. And they're pretending as if that's a new thing that's just suddenly appeared. No, you supported that from the very beginning. The Conservative government in the UK passed those laws where they literally banned the right to protest in the name of stopping super spreader events, in the name of social distancing, in the name of preventing the spread of the pandemic. You have a Labour Party, a so-called liberal opposition party in the United Kingdom, that again has vehemently supported and even called for more draconian censorship, more draconian banning of protests. And then you look at the polls in the UK, and it's 80+% of people, predominantly leftists, who supported that from the start. But now suddenly they're shocked that their protests are being banned. But only if their protests are being banned does it become a problem, when they literally signed on from it from the very beginning. And this is now expressing itself in terms of censorship with art. We now have Spotify, and the headline is Spotify now censoring song lyrics that contain misinformation, literally deleting tracks by major artists from their platform that criticize lockdown, that question the vaccine. And in this case, it's Ian Brown, who was probably one of the biggest frontmen in the United Kingdom throughout the 80s and the 90s with the Stone Roses. Now, of course, with his solo career, in a flashback to how art offended the Soviet regime was blacklisted, streaming giant Spotify is now censoring song lyrics that contain, quote, misinformation. What is misinformation? Anything that offends the technocratic elites, the scientific dictatorship. Ian Brown revealed that Spotify had deleted his anti-lockdown song Little Seed, Big Tree, which was originally released last September. He tweeted a couple of days ago, quote, Spotify stream the streams and censor artists like they have with my last song. Took it down, just put it down the memory hole. Free expression as revolution. And if you read the song lyrics to this track, he's basically talking about lockdowns. He's talking about mandatory vaccines. And again, Brown has been a vehement voice against lockdown and mandatory vaccines since basically the start, since a year ago when it first came into effect. In fact, he said numerous times that he will refuse to perform at music venues that mandate proof of COVID-19 vaccination as a condition of entry. And that started off with him trending on Twitter and being bashed by many of these same people who are now suddenly so shocked that they've lost the right to protest. Many of them criticized Ian Brown for his anti-lockdown stance. And in fact, Spotify put out a statement after they deleted his track. They said Spotify prohibits content on the platform which promotes dangerous, false, deceptive, or misleading content about COVID-19. So they're literally banning art which contradicts the narrative of the technocratic elite. It's not just political opinions. It's not just their narrow definition of hate speech, which is basically criticism of anyone who they can identify as a minority group. Now it's literally art. It's literally music. Now, if you go back in history, we've seen this before. And as I write in the article, it's a continuation of enforcing a monoculture of thought by ensuring any form of art that carries a message which offends technocratic elites is blacklisted. Because if you go back to the Soviet Empire under old Uncle Joe, art wasn't allowed to be publicly displayed. It wasn't allowed to be state-funded unless it carried the same political message as the Soviet regime, as the Soviet elite. It was called socialist realism. It was the prescribed style of idealized art. This meant that every sculpture, statue, and painting had to conform to an established aesthetic in order to, quote, educate citizens on how to be the perfect Soviets. In order to entrench loyalty to the Communist Party and advance a utopian image of Soviet society, the purpose of socialist realism was to limit popular culture to a specific, highly regulated fraction of emotional expression that promoted Soviet ideals. So again, it's about only incentivizing art, music that can be created, that can even become public and accessible to the general public by carrying a woke, diverse social justice message. And as an artist, people know that if it doesn't have a kind of tokenism that gives a nod to that, even if it's not genuinely meant, it's never going to get exposed to the public. And as an artist, as a musician, they're going to fail because they're not towing the party line. And it was literally the party line back in Soviet days. Now it's the party line of the hashtag diversity, woke, technocratic elite. And in fact, I wrote an article, I think it was last year. In fact, it's here, headline, New Purity Test Tool to Scan Hollywood Scripts for Diversity Bias. Major Hollywood studios are set to use a new tool that scans movie and TV scripts, flags up any examples where diversity is not portrayed positively, a chilling new development that has echoes of Soviet realism. So again, we saw, for example, with the Brits, they came out publicly and said, oh, the Brit nominations, the British Film Awards, is majority.
Greetings. You are now tuned into The Vault. Trust Christian on enough to control everything. Just want to thank you for tuning in live, listening to replay. Appreciate everybody for tuning in line to listen to replay. Always appreciate you all. This is once again Trust Christian in The Vault, episode 291, Preparing Taxes for Trust. We're interviewing the IRS enrolled agent today. Her name is Larissa Humphrey. Definitely appreciate her coming on and doing this episode. People have asked about this topic for years, so we know how important this particular episode is. We know how important this interview is, this conversation, and just, what is it that we're going to be talking to her about, particularly because people at The Vault for years ask about trust and different businesses. They come with many different interviews. People have asked about accountants for many different years, ones that they could be recommended to, obviously being recommended to one of the highest levels that you can receive, and, being able to defend people in front of the IRS, so it takes away the spookiness to how to engage with them, particularly whether it's with your business or your personal situation. And so we're definitely going to have some good questions for today, but once again, we're talking with Larissa Humphrey. She is the owner and founder of Abundant Returns, which is a tax company as far as helping you minimize your tax liability, your accounting, things of that nature. She's definitely someone there to help you with bookkeeping. They do multiple various accounting services as well, and she has a national business, so it is something that you all can take advantage of in multiple different states. Obviously, they have a internet presence, obviously, which would be abundantreturns.com, abundantreturns.com /contact, so you all can contact them, reach out to them, promo code The Vault. Just reach out to them and let them know that you would like to inquire about their services moving forward. They do have a really smooth engagement process with her team and the people that she's dealing with. So always appreciate someone that has business. She's been in business for over 25 years, so it shows the longevity, it shows her integrity, it shows that she obviously is not just someone that is trying to do this. Even though we don't show our faces at the Vault and don't need to, we still share with you people that if you want to come in contact with them, meet them in person, and still do business with them, you can. We do have private workshops at the Vault. We have our next day workshop coming up in April, but we definitely like to feature people like this at our workshops. She is someone that has the credibility. She has the standing on her own. So we definitely appreciate Larissa Humphrey for joining us today, really taking the time out of her schedule to just go over, maybe demystifying some myths that are really out there in accounting and people handling their business. So appreciate you, Larissa. Is there anything you want to start off the conversation with us today?
Yes, I have worked hard for the last 30 years building this business. I just need to clarify that.
Yeah. At the
5 years.
Yeah. Yeah, we'll give you the extra 5.
Thank you very much.
Thank you. Yes. What is probably the biggest thing that you run into preparing, and we have a large entrepreneur base, but you can answer for entrepreneurs and employees, whatever one you prefer as well. But what would you say is probably one of the most pervading misconceptions about lowering your tax liability as an entrepreneur or as a personal person? What would you say is the biggest misnomer, or why is this so spooky, and why would you say that?
Well, I think the biggest misnomer is people think they can just write off whatever they want to on their taxes. The IRS has set up rules. They are very specific. If you cross them and the IRS finds out about it, it's not going to be cute. Once they audit you, they'll keep auditing you every couple of years just to make sure you're doing what you're supposed to be doing correctly. So the best way to do it is just start out, follow the rules, claim the things that you can claim. I have an extensive list that I would love to send to you about what you can write off on your taxes. And that's going to tell you, don't submit crazy stuff.
Right.
That's the problem. People just don't get it. Another issue is record keeping. They don't keep any records. They think you can just pull numbers out of the air. It doesn't work like that. You need proof. Because the IRS is not playing with you.
When you say proof, we'll clarify proof. Is it just pure record keepers? Is it bank statements? I think a lot of people would try to depend on their bank statements alone.
Yeah, bank statements are good, but it needs to be specific. So the best way to do it is to have the receipt where you gave the money to the vendor.
Right.
That explains exactly what you purchased. Because, all right, if you go to Sam's Club, for instance, well, you could buy gas, you could buy computers, you could buy food. How do we know how to categorize that? And that's why you need the receipt that's going to tell exactly what it is you purchased, and then we'll know where to put it, and then you're safe.
Okay, so when it comes to holding on the receipt and doing these tedious things, people want to know, is it perfectly legal for them to want to lower their tax bracket?
Yes, it's perfectly legal. Okay, Congress put these laws in place that explain to you how to lower your taxes. There's more information in there about that than anything else. Now, the majority of the tax savings are for businesses because the people who are in Congress, they're business owners and real estate investors and owners. They don't want to pay taxes either. So they put all these rules in place that explain to you how to not pay taxes. That's what the tax code is. So you just need to know what it says, which that's what I do. I'm an enrolled agent. That means I passed a really hard test with the IRS and about tax code, about the tax law and how it applies to individuals and businesses and trusts and everybody, all the taxpayers. So as long as you're aware of the rules and you follow them, it's perfectly legal to pay zero taxes.
What do you think the thought process? I gotta agree to everybody that's in the chat. Shout out to Kansas, Missouri for tuning in live, listening to replay. We got San Francisco tuning in live, listening to replay. We got Texas tuning in live, listening to replay. We got Memphis tuning in live, listening to replay. Appreciate all you all for tuning in live. Definitely know you are tuning in live for sure right now and listening to replay. Let's talk about the old time thing where people, a lot of the CEOs, they would claim $1 so they didn't have to take on a personal tax liability, but a lot of them would have trust in place. Could you talk about how the elite are utilizing trust as a tool to effectively own and control everything to lower their tax bracket? Could you talk about scenarios that you've encountered in your years where people are utilizing these tools, particularly trust, to effectively lower their tax bracket, to own up and control everything?
Well, He said it. They own nothing, control everything. So they put everything into the trust. So the trust pays all the bills for the household, for the rental property, for whatever they've got. And they don't pay anything. So they're fine with a $1 salary. They don't have to pay for anything. What do they need money for, right? I have a friend that has got several trusts. He carries around this gigantic wallet with, I don't know, it must be 40 different debit cards in there. And because he has to be able to pay for whatever he's purchasing out of whichever trust he's trying to pay from. Mm-hmm. And that's because everything goes through the trust, and he ends up with no tax liability. So I've seen a lot of people. Well, that's the basic way it works. There's so many different strategies you could use, so many different scenarios. It just all depends on what you want. So what we do at my company is spend our time trying to figure out, what is it that you want? If you can tell us what you want, we can help you get there. And we'll use your trust, we'll use your businesses, we'll use your kids. It's not going to hurt them. They get money to get to the whatever dreams you have and make it happen for you.
When you talk about that, I think it's a really good point to make, that which is you got to come with a plan. You got to come with a destination in mind of where you want to go, so the numbers can plan out. So could you talk about? I'm glad you introduced that subject. Could you talk about what's called effective tax planning, where you are utilizing different various entities to mitigate and minimize your tax liability? Could you talk about how you and your company, Abundant Returns, actually helps a person grow from more of a defensive position, where a lot of people create this term called the budget, and a lot of people hate this term. They hate the term called the budget. But could you talk about what you guys do in the term called planning, and tax planning? Could you talk about that? What does that really mean when it comes to tax planning, as opposed to someone sitting around playing a defensive? And that's crazy. I could give a story right now of someone that they were making over $300,000 in their business every year, and they were actually claiming negative. So they were looking to get money back from the government, and they were. And the government came after them recently and said, you owe us $179,000. Now you need to let us see your books, how you claimed this negative, or you can just give us the $179,000. We'll put you on a payment plan. How would you like to pay?
Oh my God! Yeah, they needed some tax planning. Well, let me give you a scenario of one I did recently. A young attorney, he had nothing. He lives in an apartment, and, nothing. So he's very young, just out of law school, maybe 2 years. Well, he got this case that put over $1 million in his pocket, one case. So he came to me and said, oh my God, what am I going to do? How much taxes does the government want? And I said, at least a third of it, probably a little more. Oh, don't forget about the state. So probably about 40, 47, almost 50% of that money the government would like to put in its pocket.
Right.
And he was like, oh no, don't want to do that. So what I did is set up 2 trusts and a foundation. So one was a business trust, one is a family trust. And the business trust became partners with his law firm. Actually, I set up 2 law firms for him. And so, and an advertising agency, as a matter of fact. So we set up 3 businesses, 2 trusts, and a foundation. But what ended up happening is the business trust was a partner in one of his law firms. So the business trust was a 98% partner, as a matter of fact. So what came onto his personal tax return was just 2% of the profits, and I can't remember how much, but he ended up getting a refund of all the money that he paid in, because we had to put him on payroll. So he has a W-2 from each of those companies, not the trusts, or not the foundation, just the companies. Mm-hmm.
On the public side.
Yeah, and what that does is makes it legitimate. When you have payroll, it legitimizes your position. I'm an employee of this company. So all the money he had to pay in through payroll taxes, he got that back when we filed his return. But what helped the most was he made a $350,000 donation to his foundation. So that gave him that $350,000 write-off on his personal return. So now he bought a house in the family trust name, so that trust is paying for all the expenses of him living in a house. And it was great. And there's nothing the IRS can say, because everything we did is 100% legitimate. It's all legal. The tax code spells it out.
It's so interesting to hear how effective tax planning can literally keep your life intact, not destroy your life, literally keep your life where you enjoy it and people are still happy. Think about it. Charity is to lighten the burden of government by doing some charity. So his charity is to do charity, period. It's charity. And so it's not that it's not to do charity, but for him to receive that benefit, that's something that it's just a benefit. So
and look,
go ahead.
Oh, look at that. He gets to go and play. He wants to help the puppies. He likes homeless puppies. So that's what his foundation does. It cares for homeless puppies. Now, he's got limited time right now because he's real busy making that money being an attorney. But when he feels like it, he goes to play with the puppies. The charity pays for it. Everything's legal, and he's enjoying what he's doing. So it's whatever you want. That's what we do at Abundant Returns, is figure out, well, you got to figure out what you want. And then we'll come up with the plan to make it happen. And then you're not going to pay taxes on top of that?
Right.
What else do you want?
Okay, so let's get a little bit more nitty-gritty with, I like getting rid of those myths because there's a lot of apprehension, even sometimes people with money, where they don't take advantage of the tax planning perspective, whether it's before they get the million or after they get the million. Could you talk about the time process, the expectations that you have as a person that's working with a client? What are the expectations traditionally in the relationship of planning? A lot of people come from backgrounds where they are very apprehensive for IRS dealings and taxes and things. So coming to someone that's kind of has the middle, the referee ground, such as yourself, what would you say to people that, with the expectation coming to a referee such as yourself, saying, okay, you can represent me, you can help me win? What does our relationship look like? I've never had a relationship with an enrolled agent before and their company. What does that look like? And how long does that usually take to solidify that relationship?
Okay, what we like to do is have you get a tax plan. A tax strategy is what we want to put in place for you. So we meet with you at least quarterly, and that would be with me, the tax person, or with our business consultant who would help you grow your business. Because growing your business is the main part of this. We can get more money, you're happier, we got more options. More money gives you more options. So there are more strategies we can do if you have more money to work with. So we meet at least quarterly. Now is the perfect time at the beginning of the year because it gives us enough time to, get to know you, get to know what you want, put everything in place. Because the deadline for 2020 to make sure you have a great tax strategy in place and pay zero taxes is December 31st. So as long as we do everything we need to do before then, you will be in a great position.
Did you mean to say 2021?
what year am I in? Okay.
We're in 2021. But I mean, even people that like, and I want you maybe answer this after you answer the question, which is people that are doing stuff from 2020. Maybe how you can help them to handle minimizing if it's too late. You know, all those questions, because everybody always wants to know. You know, I found out about this afterwards, so how can I take advantage of it before I call my 2020? So if you can.
Yeah, there are a few things we can still do to help you out with 2020. But yeah, the deadline was December 31st for 2020.
Right.
Okay. But knowing what we know, things that some ways you can get write-offs for things that are not taxable to you on your personal returns. So that's going to save you some money. We also just have a lot of knowledge of the tax code, so we know what you can write off and what you can't. Yes, we would be able to help you with 2020. We would need you to, give us all your documents, and then your tax preparer would go through it to see and ask you different questions about whatever things that you've done, and then we would take all that into account to prepare the return.
Okay, pretty seamless process there with the people that you have on staff. Obviously, have a huge staff that can handle people inquiring and do business with you guys and stuff of that nature. So, but again, some people always want to hear the softer side of it. What made you want to do what you're doing and even go as far as becoming an enrolled agent?
Oh, well, I was watching TV and I saw that Ross Perot paid less than $2,000 in personal income tax. Now, Ross Perot was a billionaire then, and I made $35,000 that year. So I was like, how in the world? Because I knew I paid $4,000 to federal taxes, and then I paid another $2,000 to the state. I'm in Georgia, and so that means I paid more than $6,000 in personal taxes on $35,000 that I made, while the billionaire paid $2,000. I paid triple the taxes a billionaire paid. So I have to calm down. I still get mad about that. So I said, okay, there is something to this tax thing. So I went and took a local tax class. Then I went to work for the IRS. And then I became a certified tax coach and tax strategist. And that's where I really learned about all the different things that you can do to save taxes. So, and the tax code is full of them. It's full of them. There's so many different ways you can decrease your taxes, but you just have to know what to do.
What do you think about the term, quote unquote, hiring the right professionals? Could you talk about people in your field over the years up until now, how you've seen a lot of the shakers really fall off, the people that didn't have integrity in your field, but now you see that, integrity has played a large part in what makes people come to you and trust you and refer people to you and, really continue to come back and forth, come back and keep coming back and just people really increasing your business and you increasing your business throughout the years, whereas others have fell off. Could you talk about that throughout the years?
Yeah, the majority of my new clients do come from referrals. That's true. Because people are telling their friends how we're able to help them figure out their destiny, put the entities in place that they need, structure everything, tell them how to pay zero taxes. That's a big one right there. Something about not paying taxes people seem to like. And we just help you along the way. My team has over 200 years experience. So we're here to guide you and help you show what you need to do and how you need to do it. Make sure everything in place so that you don't have a problem with the IRS. I still see when new clients come in, they bring their tax returns, and I'm like, what in the world were they doing? Because Just because you got some letters behind them doesn't mean you know what you're doing. So when you're choosing a professional, you need to talk to someone who understands where you're coming from and what you're doing and where you're going, because that way they can help you get there.
Right, and that's very, very important to have guided professional experience. I think that takes away the apprehension that's there. You know, I remember when I got it down, I was like, this is an accounting, and the mentors always said that, you know, you always want to report. That's the main thing you want to do, is just report them. There was recently a case in the news. Is a billionaire, black gentleman named Robert Smith, and they actually came after him for tax evasion, and he actually pleaded, I would like to say, guilty. And because he pleaded guilty, he had to pay, I think, about $100 million in taxes or more. He definitely had to pay about $100+ million in taxes. Remember, he didn't go to jail for tax evasion, though. Like I say, he set it out in court, and it was really because of a bad business partner. The business partner set up the charity. They set up the charity where this guy set up a charity. He's the beneficiary of the charity. His daughter's a beneficiary. His wife's a beneficiary. First of all, how do you be a beneficiary of the charity? The charity's for the public. But clearly, clearly, this guy's a billionaire, and he didn't understand that. Or whoever set him up. Exactly. He was in a charity, and he still, once again, was in an incorrect position, and so it flashed because Robert was associated with this guy. You know, this guy gave Robert quite a few millions, billions of dollars to invest, and he was making this money back to the charity, obviously, you know, in an unscrupulous way, you know, going to charity, which ultimately led to, you know, Robert having to kick out $100 million. But when you're a billionaire, hey, you know, when you're a billionaire, you know, you can lose $100 million and he'll be perfectly fine. So, you know, well, someone said that it's like the paper. Could you talk about even the emotional sentiment that you get from even wealthy people or people that have money that are uneasy about dealing with the IRS? Could you talk about that? Because some people think, oh, it's just because I don't have any money, I got a bad relationship with the IRS. It's like, no, quite a few that have money still are very uneasy about that. Or in your experience recently, or over the years, that people that have money, they're a lot more friendlier towards the IRS. What would you say about that?
No, I would say nobody likes the IRS. Friendly? No, they like to play this game with you. I've been to several audits. I act like, oh, I like y'all. Y'all are my friend. All the while, they're stabbing you right in the back. Because they have to try to gain your trust to get you to explain how you have done wrong. And that's all they want. So I haven't met anybody that likes the IRS, including the people that work there. They don't like it either. I don't know what you mean by that.
Yeah.
I don't care how much money you have, you still don't want to pay. I don't care how much you got.
Okay, great. And so when it comes to just putting yourself in the correct position of trusteeship, own nothing, control everything, then the position is the mentality that people should be caring more about. And that's where people such as yourself come and play, because you deal with the, you know about the numbers and how numbers are going to play out in specific structures and things of that nature. And so that's very, very important. For everybody that's listening to the chat, feel free to type any questions into the chat. We definitely got around here for some time here. We're going to do our best to get as many questions as we possibly can. Preparing taxes for a trust interview, and so she's already laid out, you know, some of the stories that she's dealt with, clients that she's dealt with, and these are things that are going on right now in her business, how she's growing it and things of that nature. So we always love seeing success. Obviously, she has a national business. You know, I'm pretty sure she can handle international clients that want to do business in the States. All she's doing is just making sure you can handle yourself in the States. And that's really, really important. It was funny because back in the day, one of our mentors said that America is one of the greatest tax havens. What would you say to that if someone said that to you?
Depends on how much money you're talking about. Trying to, I don't know what you want to call it.
Right.
Do whatever you're trying to do with it.
Right.
But yeah, we got some great laws in place. America is built for the businessman because, like I said, everybody in Congress has a business or is a real estate investor. So they make laws to benefit themselves. And it just continues on and on. You don't see them change it. And even when Trump came in, I was thinking, oh no, he's going to mess up my thing. But no, he put more good stuff in place for businesses.
Right.
So that is the ticket. That's the way to go. Have a business and then use Trump to implement, make it work.
So, okay, we got a question in the chat for you. So, how does the IRS require accounting for foreign currency donations?
For foreign currency donations?
Yes.
So, you mean you're going to give to an American charity?
Right. Very important part of the question. So if you can hear that and you're listening and you typed your question, just answer that part and we'll get back to your question, which is, like we say, the individual asked, how does the IRS require accounting for foreign currency donations?
Well, what the IRS requires on the return is just the amount that was donated. If you're talking about an American charity,
right?
So the IRS doesn't go to look at what donations you receive to see how it is accounted for. If you say you receive $4 million, they're going to say, okay, if there's an investigation into the charity and they go back to look at the donations, then they would make sure that is exactly how much money it was received. So this money is reported in American dollars. So as long as you can prove that you received 4 million American dollars, then you're all right. I guess that answers your question.
And that's what I mean. It's so much, so many misconceptions out there, and it's really so much just information out there about these type of topics. And so basically, the question is accepting. So let's just say a person has a trust and they're accepting money in foreign currencies other than the United States. Would they report that on a tax return for the actual trust in the United States tax return?
Yes, but you will report it in American dollars. So whatever you got is whatever the equivalent is in dollars.
Okay. To cover yourself. She just told you, ladies and gentlemen, you don't need trust Christian to give you all the holy word. This is somebody that's speaking from a perspective that's trying to help save some money here, ladies and gentlemen. So you heard what she said. She said help you save yourself so you don't go to jail and save some money. This is not about saving money. So you have to report more money on the trust document, then that's what you got to do, ladies and gentlemen, because one of our mentors told us you got to treat the trust as if it was a public trust, especially if it's a private trust. Treat it as a public trust so you can still be able to maintain if something were to happen where inquiries did come, you're still able to provide things in a way in which shows a level of privacy. At the same time, shows that you're doing proper diligence and record keeping. So could you talk about bookkeeping, how much it usually costs for people, what are people benefit of bookkeeping on a monthly basis or quarterly basis? Something so minimal as that. Could you talk about that really is like the crimping hourglass for making sure that your business is solid?
Yeah, that's your proof that you're doing what you're supposed to do, is having your bookkeeping done. That's where we are able to legitimize all your write-offs, because you have the proof that you paid it because it came from, this source and was paid to whatever source. So that's what you need in order to document everything, so you can make sure you can prove your case if you should ever have to against the IRS. It's your financials that do that, and that's what's produced when you do bookkeeping. Now, the price is going to vary depending on how much work it is. I think we start around $200 a month, but it can go up from there because of how much work it is. But it's so worth it, because what you get are those financial documents that you can use to, number one, get your taxes done, but you can use it to get loans, go into partnerships with other people, establish all kinds of things, other businesses. So it's so very important to have your bookkeeping done. If you don't have your bookkeeping done, it's like you have nothing. You have no basis. You have no, you can't prove anything. It's like the basic thing you need if you're going to call yourself running a business.
And it's interesting because so many entrepreneurs are like strapped for cash. They're trying to do ventures in their part-time. Everybody's trying to do this whole part-time work from home business stuff. I'm gonna work from home and do business, and they're definitely griping about the price of startup costs. Especially the ones that are doing these home-based businesses. They're griping about the startup costs, and one of the parts of the startup cost is once again monthly record keeping. And people say, "Well, I'm not making money in my business right now, so why would I need record keeping done?" That would be a good question for you. Is I don't have any money flowing. Do I need record keeping? What would you say to that?
Yes, you need record keeping. The IRS requires you to have record keeping.
Right.
It's not like it's an option.
Right.
So, what people don't understand is we provide a lot more than just adding up your numbers. So you're saying you're strapped for cash, you know where to go, you don't know how to run a business. We can help you with that. We can provide guidance on how you can get more cash. Maybe we have an idea. Look, we deal with thousands of business owners. Maybe we're hooking you up with somebody. Maybe we can give you an idea about another way for you to make money in that business because we got 5 other clients in that same business that are doing this and it's bringing them in X amount of dollars a month. So there's so much more to getting your records produced, doing your bookkeeping when you come to work. Now, I don't know what everybody else is doing, but we help our clients succeed. And that's because we have the knowledge that every business owner needs to do what they're doing. We can make you better. It's what we do.
Right. It's interesting because so many people have never really experienced being able to get in contact with someone that has a high level of area of expertise and track record. It's so many people just popping up in businesses here and then. Obviously, there's an abundance of these franchises of the H&R Block or the TurboTax or these different places to offer people different. It's so important because we did a front of vault for years now about relationships and going out and establishing relationships with high-end talent such as yourself. Someone has become an expert in their field and can actually give you tangible results, like people that you can give references to, that you're helping people succeed. A case study, obviously, from years, we've been doing this. But it's just so interesting to replace a lot of the misunderstanding of the relationship that you get when you have an account firm, not just an accountant, but an account firm that, like a team such as yourself, that you guys have tons of experience. People have area expertise in different areas. So now people aren't going to Uncle Joe or Uncle Larry. They're coming to a firm that has, like you say, they can offer you more than just, it's let me run your numbers and play your numbers up. It's literally, a relationship that says, hey, we know some businesses that are doing the same exact thing. This may be able to add to your bottom line, or establishing and crossing a relationship over and passing a relationship of another entrepreneur to another entrepreneur. These are some of the strategic plays that, if you don't have this experience, having a good accounting firm can help with that. Specifically in the early years of a life entrepreneur or investor, because you don't have that experience. You can like you say, you can make some money. Next thing you know, you make, and then you go to someone like her with her firm, and you're looking at like, well, you've actually been overpaying for years now, right? We know that we have a strategy we can show you that she could have been implementing, and we can show you the laws to substantiate this position.
That is so true. Normally when people come in, we look at their last 3 years of taxes and get an average of about $9,000 back, around $3,000 per year, that either the other firm just missed or didn't know or didn't put on there or whatever. But that's a lot of money. If I got $9,000 right now, I'll take it.
Got that right. Right.
But then going forward, we're able to set up a plan to where you don't just get, $3,000 a year. You stop paying taxes. It's zero taxes because we know how to set you up so you're in a position to pay zero taxes.
Right. Okay. It's just interesting when we get to these topics such as taxes. They're so sensitive. I stand in a room with high net worth individuals at times, and they're still very, very hesitant, very tentative. And it's partially because a lot of them, they're not tax experts. They're not tax, experts at all. And so they really try to shy away and stay away from it because, it's like, well, why are you guys even talking about it in this environment in the first place? But they do address it quite a bit in our environment. They definitely address different taxes, specifically a lot of foreigners, going from one jurisdiction to the next, whether it's based off your residency and things of that nature. And like I say, when it comes to being inside of the United States, a lot of people are trying to move into the United States, and so because they have these businesses, now they have to set up an American business, or they really obviously want themselves in the best tax minimized position as well, being in another country, because then they're going to get double taxed because either they're making money and taking it back home, or they're making it in two different jurisdictions, and they're being tied down now to a tax liability in multiple jurisdictions. So they come over and they seek people such as Larissa for her experience and things of that nature. Is there any other examples you could possibly give to people? How, you're obviously a zero to hero example, but, take it from, just different positions. And it's always interesting because it's like, well, what are some of the apprehensions that people have, then they end up doing business with you? So maybe it was a family situation that made them change their mind, or it was a situation where they heard they went to another firm, they said, okay, they were charging more, but they were giving me less. What would be actually your unique proposition at your company?
It's the guidance. Every day when I talk with my clients, they say that the biggest deal is that we give them the guidance they need to make the right decisions. So a lot of the entrepreneurs, now they're very intelligent people, but even as smart as you are, you just don't know everything.
Right.
And they put a lot of listening to because they're always telling me, well, they said I should do this, and they said I should do that. I don't know who this they is, but they really need to shut up. You need to listen to people who have the knowledge on the questions that you're asking.
Right.
So, but instead of listening to your friend who's not as advanced as you are, which I really don't understand, but that's over my head. So that's what I get a lot, is that they are so glad to be at Abundant Returns because they know if they have a question, they can ask us at any time.
Okay.
And we'll get back to them to say, okay, this is the best way to go, or we'll explore other opportunities for them. We're just doing everything we can to help our clients succeed.
What would you say made you actually put that in your model as opposed to just taking a traditional approach of doing accounting, doing record keeping, doing tax filing?
Well, it's true. I've had lots of mentors, and they have all been saying, don't say that, it sounds too good to be true. But it is true. What do you want from me? Because that's what we do. So, because I want people to know that's what we do. That's why it's in our model.
Great. That's great. So once a person, and it's crazy because sometimes people get so stuck in the muck of just trying to reduce their tax liability that they don't really even get to the name of your company, which is called Abundant Returns. They don't really get to that point because it's a hard transition to go from poverty mentality and desperation mentality to abundant and thriving mentality. When a person gets that plan in place and you start seeing success light up on their face from year to year through tax planning and seeing people really just straighten out their life, it's crazy because I'm sure you can see that there's just a huge lack of even accounting information in the public school system and education in general.
They don't tell you anything about how to do that unless you take accounting courses, and they're not easy. It's not easy at all.
When you hear people say, culturally that black people aren't good at math, what would you say about that in respect of how you, a black woman, that how is it that you were able to do it? And would you encourage more people to engage in the practice based off of your experience?
I think black people can do anything they want to do. I didn't start out as studying math, but what happened was I got so engaged in my pursuit of why am I paying triple the taxes a billionaire paid that I got good at whatever I needed to get good at. I mastered my craft. I honed it so I could do this and save lots of money on taxes. But people can do whatever they want to do if they put their mind to it. That's my thought. I've seen it. I've done it. So I know it's true.
Now I'm about to ask you a question that goes into something that actually makes you really good as an entrepreneur, and so many people fall into the trap, which is they become the expert for their life. They're the only expert. They're the smartest expert in the room. You have built a team. What has made you build a team, trust your team, and understand the concept that things happen when you have the right team around you?
Ooh, that's so true. What made me build a team? Because I couldn't do it by myself. Once you get to a certain point, like right around $1 million, man, you can't do it by yourself. You probably can't even get to $1 million by yourself. But you need help, and you need people who specialize in different areas to help you. And I can say that I truly have that in place finally after all these years of messing around. I guess I was just trying to be cheap and not hire the people with the expertise that I needed. Bad mistake. It cost me more than I could have ever imagined. I should have just hired the right people in the first place. But I hired tax preparers that have licenses, CPAs and EAs, so that they are skilled in that. My COO has several degrees. She has an MBA, and she has I can't think of that other thing. But I'm sorry. If you ask me, she's got a doctorate on how to run a business, because she surely has put mine together. But that's a big mistake. Not hiring unqualified people is bad. But when you're struggling for dollars, you make a bad decision like that. Now, if you come in and ask me today, I would say, no, don't hire that unqualified person that you can hire for, whatever minimal wages, because they're going to cost you more in the long run. And I see that.
That's important. So many people, they miss that team building concept. Could you even delve a little bit deeper on why is it that you're not the COO of your company, and talk about maybe some other things you have on your board, maybe how your structure looks internally, how many positions you have that are helping you run the company, and what is their specific roles, and what value do they bring to the company, how they've kind of helps you minimize your hand in that particular activity that they're engaging in and managing at this point.
Okay, the reason I'm not the COO is because I don't know how to run a business. I played at it for quite some time, but I don't really know. I didn't go to business school. I just kind of fell into my craft. I'm really good at doing taxes because I'm very detailed and I'm looking for that money. And another reason is because to me, your taxes or your situation is like a puzzle. I have always loved puzzles since I was a little kid. And when I'm doing your taxes, I'm just putting the pieces of the puzzle together. So I'm enjoying this. I love it. So, but doing taxes doesn't make you a person that can run a business. I don't know. That is not my strong suit. I can put a plan together. I can do your taxes. I can put you in a great position. But as far as how to run the business, putting all the different processes in place, that's horrible. I hate it on top of that. But my team is good at that. So yeah, the people that are in place because they're good at their particular craft. And that's what every business owner should look for. An expert. And I hire people who are more educated and in the areas that we're talking about so that they could help me. So I have a CPA on staff. He's got like 37 years experience, I think. And when I have a question, I ask him. And sure enough, he knows. If he doesn't know, he'll go look it up. And I learn from him. So that's major when you're running a business. Because the next time I don't have to ask him, I know where to go to find that type of question. You see what I'm saying?
Oh yeah. So you have a CPA for the company, you have a COO. Do you have any other positions that are there to help and aid you in your process?
Yes, we have a client relations manager who makes sure all the clients are happy. They get what they need. They go where they need to go. They see who they need to see. So he just kind of takes care of the clients. He's the concierge. I have an executive assistant who helps me because, she told me I get over 300 emails a day. So I needed help trying to get, my part of it so I can concentrate on dealing with my clients and helping them to do what they need to do. I have an enrolled agent who specializes in taxes, just doing the taxes, making sure they are correct. She is so very accurate. And I have a payroll specialist because when you do a tax plan, you have to have payroll to complement your plan, because you have to be an employee of your company so you can enjoy all the benefits that are in the tax code for an employee. So I have a payroll specialist that does that, and then I have a director of bookkeeping. Now what she does is help to make sure that all of your bank statements, your bookkeeping records, your financials are correct, and that they are at your fingertips when you need them. Because many times clients call us and say, hey, I'm trying to buy a house, or hey, I need to get a loan, and they need their financials for that. So what she does is make sure that she gets that information to them. Now she has 3 accountants under her, so those are the other 3 positions, and that's my staff.
Okay, great. Now, as you were speaking, I thought about this question. Why is it a disadvantage, or what are your thoughts on someone being a 1099 employee of their company? And then I want you to comment on people actually living through their company and doing it the wrong way by, like you say, not being an employee, and in turn basically living through their company, which is basically an alter ego or a disregarded entity. And could you talk about that not being classified properly with the company, and in turn how that can bring up some issues, and what's the advantage of either 1099 or W-2? Could you talk about that?
Okay, first of all, you really can't legally be a 1099 with your own company. A 1099 is a contractor. It's an independent contractor, and you can't really say you're independent of your own company. So a lot of people get into a lot of big trouble trying to say, well, I'll just do a 1099 for myself. No, that is not the way to go. So if you want to stay out of trouble, don't do that. Now people living through their companies. Okay, we got one client that came in last year, the year before, he made $3.2 million, and he paid himself $60,000. Come on now. Now you know his lifestyle did not say I live on $60,000. Because he I can't remember what kind of big car he's driving, but it's a the car costs more than $60,000. So how can you say you can live on that? So we had the really, he didn't get caught. IRS didn't figure it out yet. So hopefully we've got him restructured and he's good to go. But he's got, if you make that kind of money, you got to pay yourself a reasonable salary. They call it reasonable compensation. And if they audit you, what they do is they first look at your bank statements, business and personal, and then they see what kind of car you're driving, how much your house costs. They want to see all the documents when you purchase the house. Sometimes they'll come to your house and they'll look at your closet. What kind of clothes are you buying? Do you have a Gucci bag? What are you doing? Where's your money going? And then they can easily figure it out because, most people don't use cash anymore, but they got ways to catch cash too. Don't think you can get away.
And I mean, we could easily go there even about that Bitcoin stuff. We haven't gotten there yet. I still want you to answer the question, but I mean, I think we should end it for sure on the Bitcoin stuff for sure, because I think it's just such a sensitive topic. People are really putting money over there right now. But definitely, I'll let you finish that question. But because, like I said, living through the businesses, I mean, this is just straight up honest truth. Do you know how many people have LLCs and C corps that are disregarded entities and they're just living through it? And some people are trying to exercise this BS rule of, you can wait 3 years before you file taxes with a business. You can even talk about that too. So I would love for you to talk about these things.
Well, anytime your business has income, you are required to file a tax return for that business. And I don't even know what else to say. What else?
Like I say, just living through the business. A lot of people are living through the businesses, and I know you can help them clean it up. If you can even say, maybe a reason why we know that they need to come to you and talk to you about it, but just something along those lines about, maybe some of the reasons that scare them away from continuously living that way and living in denial and not actually contacting you, because they're still living through the business. They haven't got it properly classified. Do you recommend clients to file the 1120 for it to be a separate, distinct legal entity?
It depends.
Okay.
It depends on your situation, what you're trying to do, what do you want, where are you going.
Okay.
But what should scare the mess out of people is the IRS is real. They will come. They will take everything you have. They will have you in court for years. You don't want to deal with them because they will audit you every couple of years to make sure you're doing what they told you to do. They will beat you down. They're horrible. That's what should scare you.
Right.
So you can keep playing these games with this money if you want to. But you don't have to, because there's an easy legal way for you to do it. We can help you. We can tell you how to. If you want a Gucci bag, we can tell you how to get one. We got one client just bought a $200,000 Porsche. Of course, us conservative accounting type people, we were like, oh my God. But that's what he wanted. So we helped him get it. We showed him what to do. We were telling him how to write the whole thing off. He's good to go.
Wow. Okay, so we got a question in the chat. What about being employed by the corporation that is the beneficiary of a trust?
Yeah, that would work. That's fine. As long as you're getting a W-2, not just writing yourself a check from the business account.
Right. Does she give an LLC structure consultation for the state of Florida? So they want to know, do you give a LLC structure consultation for Florida? Can your team?
Yeah, we do that.
Okay. Okay, and then the last question. Appreciate you. We got you an hour. We're gonna wrap it up for sure here. If you could just end it, even with what you want to share with other people, share what's on your mind. But definitely about the Bitcoin tax situation. Is there anything that you can do to help? What have you encountered so far over the past 2 or 3 or 4 years where you may have gotten some clients that have come through with it? I don't know if you want to speak on it on the air, but it's up to you. So, just want to throw it out there.
Well, this Bitcoin thing, the reason that us accountants don't like it is because there's no structure. It can change value at any time. We don't know what to do with that. So you could buy something and it could be worth $14, and then the next day it's worth $1.50. So it's like, what do we do with that? That's the problem with Bitcoin. I even heard the city of Miami wants people to start paying their property taxes with cryptocurrency. I was like, what? What are we thinking? And they want to pay. They don't want to have a retirement system anymore. They want to pay the people that work for the city in crypto something. I was like, now see, that's crazy. Why would anybody want that? It's good if you can get in there and make some money and get out before it goes down, but how do you know when it's going down? So it's not my thing.
Yeah, great. And I mean, we always like to ask our experts, what their thoughts are on it, because it's one of the most it's just huge media marketing play nowadays. You see how extensive these things are. It's an abundance, just how much the media will really attack people's senses and make them go off emotional plays, and people don't have any type of logical explanation for anything other than what's going on. It's like, okay, the housing market's been going up, but you don't have any real estate. You got Bitcoin, but you don't have any real estate. And the real estate market hasn't had those type of this Bitcoin stuff is that it does, the volatility, swings that it has. And the real estate's something tangible. Bitcoin is still very intangible. And like I said, people are trying to pull it down into dollars. And when they pull it down into dollars, they're trying to basically they consider it black money in the marketplace at this point. It's money that people are almost hiding, doing illegal transactions and things of that nature. And it's unfortunate right now that people are this is something that has really changed, obviously, the way financials are looking. And a lot of people, even accountants, like you say, aren't confident in when people bring them, I made this money off crypto. Well, what do you do with that? You just made illegal money. It's not legal right now. How do you report that? And so these people they're living these lifestyles. They're living these lifestyles that, like you said, IRS is, you didn't claim, you didn't do this, but you're living in a mansion, you're living with a Ferrari, and you have this crypto money. Of course, when you have money, you can stay off with lawyers and things like that for a while. Having even good accountants, try to get some businesses going and things like that. But you're still giving your accountant a hard time when they're looking and saying, okay, we just started a business based off of crypto money. Crypto money is not technically money in the United States. It's just a foreign currency that they trade. It's not a United States domestic currency. And so, it's just a lot of questions around these things, and I think it's important to really keep talking about these things, because there is a media play and people's emotions are getting played on, and people are going to go broke before they go for rich. You got to remember, you're not smarter than the people that created the system. Whoever created Bitcoin obviously knew what the hell they were doing when they created it and didn't even want you to know who they are, but you believe that this asset is going to go up, and you don't even know the owner or how it's created or anything of that nature. So we appreciate you, Larissa, for coming in, and just, I love your energy and your obviously your attention to detail and the way that you work. And I know that there's a ton of people that are going to reach out to you. I don't want money to be an issue for people, because I always know it's like, well, I got to pay up front, or I got to do this, and it's like, look, it takes money to make money, ladies and gentlemen. But what happens when you put protection tools such as having a team of 200 years of experience working for you? That little bit of money goes a long way. Yeah. And people have asked us for years, oh, you have an accountant? Do you have an accountant? We're giving you the highest level of education and discernment you can have dealing with the IRS. And you can go back and replay the episode and hear all the great things Larissa said. You all can look into the chat, the description, upon return, the email for her to get in contact with the company is there. Promo code default. Feel free to reach out. And once again, let them know what your needs are, ladies and gentlemen. People, if you don't ever take the first step to get the right people in place. Look, she even said she has people that are smarter than her at their area expertise. Please follow suit. That means you're in good company. That's what we bring you all at the Vault. Good company. People that they have the track record, they have the credibility to do what is it that they're going to do. We brought you people throughout the past, but this is someone that's on accounting side, especially at this time of year. And And it's just such a critical element. So many people, oh, I'm going to make money, I'm going to make money, or I'm trying to make money, I'm trying to make money. But what happens when she told you, are you just good at what you do and you need to hire a team of experts? But that team of experts is not always just a one shift type tool. When you're working with someone such as her caliber, you're working with a firm. That's why y'all can talk to her right now, because she has a team. It's not just Uncle Larry and Uncle Joe accounting. You're getting a team, and they're looking to bring more years and expertise than you ever could have asked for, because that's what happens when you surround yourself with good people. There's hidden benefits. There's hidden jewels to be in good company. That's what you're paying for when you deal with a company such as Abundant Returns. You're dealing with a company that has, they're not just looking to help you out in one tax thing. They're looking to help you out with estate planning. You know, we could talk about estate planning. We didn't even get there yet. We're talking about you finding the team, finding the people, and actually utilizing them. How many people right now can put their account into Loretta's team? Why? Because it's about a team. If she has 200 years of experience and the account you've been dealing with has less than 25 years of experience, but it's your good friend or it's your good family member, why not at least go, you as the entrepreneur investor, and get a second opinion? This is like checking the pulse of your baby, checking the pulse of your blood. What is the pulse of the business? Why not go get a compilation report from her company on your company? Why not go get a second audit on your company? Why not go get an audit from her company on your company and say, look, this is really how bad shape you're in. This is how much you may have overpaid in taxes. Think about it. She's helping people get money from years past because they didn't get an assessment done. You have to surround yourself with good people. This is what the Vault does. Everybody who listens to the Vault knows that we don't bring anybody on here. We don't bring everybody on here. We bring the people that we do business with, that we have credibility with, because they can stand. She has more years of experience than almost I've been alive. Almost. That was a good one. Almost. Though. That was a good one. 30 years of experience. And not only that, when you hear people that have the passion, they have the joy for it, they say that they love doing it, they love helping clients save money. People come to the phone and say, oh, I'm going to be in trust and I want to minimize my tax liability. She just told you, and she defends people in front of the IRS. It's perfectly legal. That's where we end the episode. So we encourage you all to reach out and do your due diligence. Reach out, promo code the Vault. I can contact her through the description. AbundantReturns.com is still, you can still go there. Just let them know that the Vault's recommending you all go there, because we do have a relationship with them, and we want to let you all know that it's important to build those relationships, to keep those relationships, and we're extending that relationship to you all. And we hope that it meets you in good stead. Appreciate you, Larissa. Your energy is just always captivating. It's always, compliments go a long way, and just you as a person, engaging with you, meeting you, even seeing your student mentality when we were at the banking workshop, and just seeing, your humble spirit of asking questions, having such a voracious mentality towards learning something new, whether you knew it or didn't know it. I saw that energy when we were sitting in the room, and I'm really happy that we could get you on for this episode. I'm sure it's going to give people a ton of value, a ton of equity. I'm sure there's a ton of people that are going to reach out to you because they do need this service, and they've been running around blind. And our particular trustees, for sure, give credit for trustees. They have been left, and we never really provided that to them because we always wanted to look for more solid relationships. But you have that relationship that says, hey, look, they know you have the trust experience. That's the issue. A lot of trustees come in trusteeship and they don't have good accountants. They know how to deal with private trust and trust. They don't know about the trust system of charity involved in it. They don't know that. And then when they get in it, they don't know how to because they had their old Uncle Larry or Aunt Susie doing their taxes, or a friend of a friend doing taxes, and now they say, okay, I'm in a superior vehicle, I'm in $1 million vehicle, I need to get in contact with better people. I don't come from money. How do I get in contact with people that can truly help me protect my money and save money? So think about, and I'm sure you've heard this, and we're done. Think about how many people say, I don't want to make more money because I don't want to pay more in in taxes. And they come to someone such as yourself that's registered with the IRS says it's perfectly legal to not think that way.
Right. That's right. Christian, thank you so much. What compliments. I am flattered and humbled.
You're awesome. Thank you so much. Appreciate you, Larissa. It's been a pleasure doing this interview with you. I'm sure, after the inquiries with you and even people reaching out to the vault, I'm sure people are going to have maybe supplemental questions where maybe we could give, maybe client questions that once again, just multiple client questions that are pre-questions before they come to you. How much should they be prepared to spend? How much information do they really need to have when they come, for their personal or for their business? You say you have those things, but I think, like you say, even the email that you were going to send over about the rules or whatever it was, I think it's important for people to get the apprehension out the way. Everybody's always apprehensive about this word tax and money and IRS, and it's just like, look, you guys need to really understand this is business, not personal. As long as you guys keep it that way, you'll be perfectly fine. So appreciate you, Larissa. You guys enjoy the rest of your day. Enjoy the rest of your night. Thank you for tuning in live. Listen to replay.
Person on earth that is the African person. And
promo code the vault, and we look forward to hearing from you all at the vault.
There's one person on earth that is the African